China has been the world's growth engine for the past 2 decades, but recent regulatory clampdowns and trade tensions have raised the question, is China still pro-growth? When we look at first quarter GDP of this year, it was incredibly strong at 18.9% as the economy reopened and recovered from the lockdowns of the prior year. But more recently, growth has slowed down to a more normalized level of 4.9%. But this slower growth and fears on the policy initiatives have caused great concern amongst investors whether China is committed to the market economy that has driven this success story over the past 20 years and lifted hundreds of millions of people out of poverty. So let's dive into the impetus for the policy actions, the implications for growth, and whether China is moving back to its planned economy past. Looking at the headlines, you might be left to believe that China is cracking down on every industry, all wealthy individuals, and set on destroying profitability for publicly listed companies. We believe this is a step too far, and the government is looking to bring regulations in line with many other countries in the world. If we look at changes in the regulatory environment, it began with the Ant Financial IPO, which was pulled last year as concerns were raised about consumer protection and the lack of transparency on loan rates to consumers who were new to the system. This also happened after the founder of Ant, Jack Ma, criticized traditional banks for only lending to consumers with collateral, an industry standard. This does highlight some of the significant potential risks rising from disruptors and the lack of oversight in this emerging segment. What followed was the implementation of new regulatory measures to address some of the large technology company monopolies, data protection, privacy, and affordable pricing in healthcare as an example. There are also some strict new laws in the education sector, including the shutting down of for-profit after-school tutoring programs. And while this has eliminated some revenue streams for education companies, it's part of a broader program to reduce the extremely high levels of income parents had been forced to spend on after-school tutoring. This has made education prohibitively expensive for many families and making it nearly impossible for families to support more than one child, which has created economic and societal stress. While this example may seem particularly harsh by eliminating revenue streams in the education sector, we believe this is part of a broader initiative to address structural issues across several industries and really meant to level the playing field for small and mid-sized companies and provide more affordable access to goods and services for the broader population. We do not believe China is rejecting market economy principles, but rather taking a proactive approach to regulations which do support long-term growth. Common prosperity is the new mantra, which has become part of the investment lexicon, given President Xi Jinping has mentioned this over 60 times in the past year. However, this is not a new concept, and first appeared in 1953 during the era of Mao Zedong when the Chinese Communist Party was promoting socialism over capitalism. However, the planned economy of that era led to extremely low growth, increased rural poverty, and ultimately economic devastation. The planned economy was a complete failure. Under Deng Xiaoping, who came to power, he crafted a new meaning of common prosperity, which moved away from the planned economy. Deng said, "Allowing some peasants to get rich first is a practical policy to achieve common prosperity." Beginning in 1978, Deng unleashed a wave of regulatory reforms designed to bring people out of poverty, with economic growth and capitalism driving jobs and incomes. This resulted in extreme poverty plunging from 66% in 1990 to 0.3% in 2019. Under current President Xi Jinping, economic growth and income growth have continued to increase, but inequality remains a challenge, which led to a renewed focus on common prosperity to address structural issues that have developed over many years that did not favor the prospects for those in the lower income group. Our belief is that Xi's policies and regulatory updates are meant to continue the success of Deng Xiaoping and broaden the participation in the economic growth engine to those at the base of the pyramid. He has reintroduced common prosperity with the aim of focusing on income growth and jobs. In order to contrast the planned economy with a much more successful market economy, we can observe the changes which have occurred in China over the past 50 years. Looking at China's mortality rate over the past 60 years, the devastation and lack of healthcare in the planned economy resulted in extremely high rates of infant mortality, which have dropped sharply as China has had more access to healthcare, expanded the number of hospitals and clinics around the country, focused campaigns on nutrition and healthier lifestyles, And then as incomes grew, families have been able to focus on a better and more secure livelihood. Similarly, if we look at levels of education, they were quite low in the 1950s and 1960s. And as China focused on improving secondary education, hundreds of millions of students entered school for the first time, which has risen now to some of the highest levels of secondary education globally, with similar growth at the university level. China now produces some of the largest number of doctors and engineers globally due to its focus on high-quality education for the masses. This has led to long-term success in developing jobs, moving individuals up the skills ladder, and developing some of the most innovative and fast-growing companies versus its developing and developed market peers. The reforms over the past 40 years and the commitment to a market economy have led China to becoming the world's second largest economy and a leader in many industries across the board. But despite this incredible success story of growth, there is still a high level of inequality in this society. This has been the impetus for common prosperity and many of the regulatory changes we have witnessed over the past year. Wealth inequality has expanded in China, and 790 million people make less than renminbi 1,500 per month, which is about $233 per month. This means almost 70% of the population remains in the low-income segment. Only 8.5 million people have household incomes greater than $55,000 per annum, which is the highest income category, and 400 million people fall into the middle-income segment. What the government is looking to do is target this middle-class segment and grow it over time. When we look at the Gini coefficient, there is greater inequality versus many advanced economies. While the Gini coefficient has certainly improved over the last decade and longer term, there's a great deal more work to do, which weighs heavily on this government and has led to the policy initiatives we have witnessed. This chart illustrates the income inequality that exists in China today, with the bulk of the population in the lower income segment. And it also shows the targets of the government over the long term, where they look to make some significant improvements by 2035. In May of this year, Chinese Premier Li spoke at a party conference and spoke of a target of 700 million people in the middle class by 2035. This will be a dramatic shift as the government is targeting over 300 million people to move out of the lower income segment into the middle income segment over the next 15 years. This has been a driving force for the regulatory changes we've seen and the renewed focus on common prosperity. These measures are meant to lift incomes, reduce inequalities, and offer consumers a much better opportunity, a better livelihood, and greater access. This will also create opportunities for companies servicing this large and expanding consumer base. In addition to reducing inequality, President Xi and his team have used the past year to look at the opportunity to tackle long-term challenges. As China moves from an investment economy to a consumption and services-based economy, the government and society must face the social and environmental consequences of the rapid growth that has occurred over the past 3 decades. Certainly, China has been quite resilient during COVID and one of the first economies out, and many of the reforms of the past years are being used to adjust and sort of reassert the policies, the procedures, and the opportunities for businesses and consumers going forward. Certainly, one of the biggest challenges are the high debt levels. China's debt to GDP now exceeds 300%, which is a long-term risk to sustainable growth. And this has led to some focus on reducing debt and some curbs in the property sector to manage the excessive buildup in leverage. Similarly, on the income inequality side, policymakers have aimed to curb the disorderly expansion of capital and tighten regulations in order to provide a better safety net for lower income people and to provide affordable products and services and ultimately open up the economy to small to mid-sized businesses, which will drive growth longer term. And lastly, China is very focused on decarbonization. The country aims to reach its carbon peak by 2030 with a target of being carbon neutral by 2060 and reducing energy intensity by 3 percentage points annually. These are big challenges, but really the method of common prosperity is meant to address this. And one of the senior economic officials said most recently, common prosperity means doing a proper job of expanding the pie and dividing the pie. We will not kill the rich to help the poor. These policies are meant to tackle the long-term challenges and provide the growth and opportunity that the country needs. We see opportunity in China as the government focuses on lifting more people out of the lower income category. One of those areas is consumption. China's savings rate is around 40% of GDP. It's the highest globally. And the reason it's so high is due to the lack of a safety net and high property prices. As the safety net improves and as incomes improves, we think this will enable Chinese consumers to spend their money on a variety of products and services, including dairy products, fast food, home appliances, media, cosmetics, and insurance. The second category is healthcare. The government has sought to reduce healthcare pricing to make it more affordable. And by addressing this high cost and removing some of the burdens of distribution costs, medical companies and hospitals will be able to interact directly, resulting in low product prices for consumers at the end of the day. So we believe medical device companies could be a key beneficiary of this policy going forward. And lastly, technology. There's been so much focus on the antitrust regulations and impact on large technology companies, which we think is manageable. But more importantly, it brings more affordability to consumers. It allows smaller and mid-sized technology companies to have a place in the technology world and the ecosystem to reach more consumers. It allows merchants to list on multiple platforms so that they can reach a variety of different consumers. And at the end of the day, we don't believe that China is stifling innovation. We think innovation will only increase as more companies and more ideas are able to get to the market and are able to get funding. We will continue to monitor the risk in China, although we do believe that we are reaching a peak in the regulatory activity. Certainly one of the things we will continue to watch is, has the government stepped too far into individuals' lives and business decision making? We do believe that many of the policy actions are meant to level the playing field and continue to lift people out of the lower income category. Xi will be up for his re-election period next year, so that is something we will continue to watch. We need to see if there will be pushbacks to some of his reforms, but it seems to have consensus within the Communist Party. And most importantly, we'll be monitoring economic activity. Certainly a sharp slowdown would create challenges near term, but we do believe the stage is being set for positive long-term growth in the economy and opportunities for many of the stocks that are providing the products and services that will be geared towards the lower income portion of the population. Returning to the question we posed at the beginning of this piece, is China still pro-growth? Our answer is yes. We strongly believe that China is pro-growth. When we look back at the planned economy, it was a failure, and the successes of the past 20, 30 years has been due to the market economy. China needs growth to create jobs, to lift wages, and expand the middle class. One of the main goals of common prosperity is to bring more prosperity to the masses, and that will involve growth, and that will involve a market economy process where companies that are focused on providing goods and services at affordable prices will succeed. We certainly are taking Xi at face value and will continue to monitor the decisions of the government, but we think the market needs to look through some of the noise of the past 6 to 12 months and really see what the policies are geared towards, which is driving jobs, increasing incomes, and creating more opportunities. In conclusion, here are some of the key takeaways. The World Bank reported last year was the first increase in poverty since 1998. China, along with many countries, are going to have to find more ways to address inequality. This is a global phenomenon. A major goal of the regulations was to promote common prosperity, which is truly about expanding the income pie for the entire population. When we look back at reforms that began in 1978, these reforms lifted the most people out of poverty ever in the history of this planet, and we think this is set to continue over the coming years. Certainly, as China looks to bring more than 300 million people into the middle class, this will be an incredibly dramatic shift and see an expansion of incomes, jobs, and the ability to buy products and services. Finally, by focusing on this transformation at the base of the pyramid, we believe investors can uncover compelling opportunities in China over the next decade.